Hello guys, welcome back to another Lumley trading video. In this one we are going to be doing some in-depth stock analysis, technical analysis over on Bed Bath & Beyond. So as of today we are down about 4% on the day, we're coming down to about $1.40 and coming very close down to that 52-week low, because again all we have really been doing the past month or so has just really been a slow but steady downtrend. So what are key levels that we're paying attention to? So from a support side, from a deviation perspective, there is actually none. Reason for that is you can see any deviation on either chart. On the left we have a 6-month, on the right we have a 1 year. Anything below current price is negative. We can see, statistical mean is our closest one, and that's negative 50 cents. Obviously we cannot trade into the negative. So the support side, we don't have any, and whenever you see this, that doesn't tell you, oh, it's a great buying opportunity. To me it says, why is the stock this low? Again, there's going to be a fundamental reason for it. If you don't know the reason, probably not something you should be buying long. But really, it just be one of those things. I know these stocks are fundamentally weak. It's the same thing with the AMCs, the GameStops. If they spike, if they get a short squeeze or whatever, I'll tend to trade these short bias. I won't trade these stocks long bias. If I trade them short bias, I can usually get a good one-to-one risk to reward. And probably an 80-90% plus chance of working out. Trading it long bias, I think there's just a lot more to manage, a lot more kind of unknown going into the trade, so it's just a lot more risk. And obviously as a trader you want to be reducing risk, and the way I do that is by trading these short bias. So to me, again, there is no support from a deviation perspective. If you want support levels, I'll just be paying attention to the 52-week low, so around 125. Also going to be a bit of a psychological level, the $1.75, 50 cents, 25 cents if we continue lower. But really, where the stocks start to shine really is, I think, when you start to get into the resistance levels. So we do have statistical mean at around $2. Again, not a level I'm going to look to trade, because within the areas of statistical mean, this is considered fair value. So $2 on the 6-month, and we have a negative about 50 cents on the 1 year. So really within this range is an area I will never look to trade, because there's more risk than there is reward, at least from how I view a stock from a technical perspective. And that's why, again, I won't be trading this stock as a long bias, just trying to get a short squeeze, because again, to me, there is no edge in this level. It's a lot more just of a gamble. So really I'd be waiting for a break above $2 before this stock actually provides any trading opportunities towards me. And the first one will come around 525 to 580. Now, coming into these levels, again, I said the way I'm looking to trade these is short bias. Am I going to trade them with outright shares? Most likely not. I may short the outright shares as a day trade, and that could be a potential day trade off these levels. But if I'm looking for the kind of larger trades, I'm going to be looking to do it through a swing trade. And obviously, I don't want to be holding naked, kind of shorting shares overnight. So I may do it. Again, if I'm shorting individual shares or the outright shares, I'm going to be hedged with calls. But one way I prefer to actually do it, I just think, yes, it's a one-to-one risk to reward, but I know a lot more likely that the trade's going to come off is trading it through a credit or debit spread. What is that? So if you go over to trade, again, it's just the same thing. If you don't know what credit and debit spreads are, they could be a good thing to be looking in for, especially on these kind of stocks when they do short squeeze. If they have options to be able to trade, again, it can just make it a kind of feasible way to be trading it with a good risk to reward. But considering GameStop has options, Bed Bath & Beyond has options, that's where I'd be looking to trade it myself. So yeah, I'd be looking to do that from the 525 to the 580. If we break that, I'm looking at 850, going on to 1175 to around $12. Again, when the levels are close like that, you can use them more as zones, just because, again, they're just so close. You can also do the same with this, bit wider of a zone, but you can still use it. It's still 50 cents, but it's still about 10% move considering the stock price. And then if we break that, we're looking at $15, $18, and $24.50. So again, really my overall trade and kind of my own personal trade plan coming into this stock is, I don't care if it goes lower. I'm not going to touch it. It's not on my radar. My alert will be if it comes above $5 from these levels and above. The first time it hits them, again, I may take the potential short intraday trade, or a day trade on them. But if they kind of hold up to that level, or I'd probably just open up the same day they hit it, is just by taking it as a swing trade through a credit or debit spread and really just waiting for it to come back down. If you're getting them at the $6, once they start falling down to that $4 to $3, maybe even higher than that. But coming into those levels, you're going to be up, 8% on the options, and you still had a defined risk going into it. And you wouldn't have been too affected by the elevated premium as you would if you just bought outright puts. So that's really the main way I look to trade this. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.